Good evening, viewers. Warm welcome to the third episode of Introduction to Accountancy with Rahat Kazmi. My name is Tauseef Sarwar, and I'm your regular host, which we do a series of different online courses as well as interviews and latest news about the drop shipping and digital marketing. Today, as you know, that we have already hosted two episodes of Introduction to the Accountancy. But before I start the regular online streaming with the corporate trainer, Mr. Rahat Kazmi, I wanted to share some thoughts about pandemic, which according to the latest statistics, the second wave is on the corner or on the watch of becoming more dangerous around Europe as well as in Asia. Now, the cases in United Kingdom and Ireland are on the rise for last couple of weeks, and in fact, in the United Kingdom, I was just viewing the Sky news that they are the highest at the moment since the March of this year. So we have some lesson to learn here, a couple of lessons, in fact, to learn here. And one of the lesson we need to learn beforehand is that this pandemic disease, we need to take it more seriously. And when I say more seriously, we need to show more responsibility. That's the way I put in a terms relatively in a terms of your own responsibility to making sure that it does not spread in the people you are associated or the people around you. And that's the simple message everybody's telling these days. But what I'm trying to say here is that since this pandemic, we have learned one thing, that it might not be easy to survive here, and we might need to do lots of things or a combination of things to survive. One of those combination of things to survive is beside the showing the responsibility, is to learn a new trick and trades, or learn a new I would say professions. Now, it's very hard to learn a profession when you have passed certain ages there, but age should not be a barrier. I've seen a lot of people, including myself, that who did like I did my research in late 40s, and that's quite normal in Europe to do it. And I did my third master's in late 40s as well a couple of years ago. So it's kind of you have to understand what is best for you, what suits you, and how you want to do it. Like the vision is very important. So when I say about the vision is that what you need to do it in order to survive this situation. This situation, I'm not an expert or I'm not a doctor here, but what I can see from the statistics in especially in United Kingdom and Ireland, it's not going to go away. This situation is in fact getting worse. So when this situation is going to get worse, and we need to adapt accordingly. What we need to do is that to learn new professions there. For example, like I said that in my episode 2 with Rahat Kazmi last week there, I was mentioning that a lot of people ask this question, and not only from Ireland and UK, but also from Pakistan, India, and Bangladesh, especially the people who listen to me very carefully, or would listen to me every week there, my live stream there, that what we need to do to in order to survive there. And I tell them, and my answer is very simple and blunt, and that is, you need to understand what is your strength. You need to find out what is your strength. So when you know what is your strength, for example, if you know that you are good in numbers, or you're good in mathematics, or you are good in statistics there, or you're good in accountancy, try to find out short-term courses and the courses which are available online. Try to get them. And I know it's very difficult. Sometimes you have a mindset there. It's not an easy job. I totally agree with the audiences there, but you have to you have to make sure that your mind itself is switched on to learn something new. It's never too late in your life to learn something new. For example, I haven't done drop shipping in last recent years there, but since the change of pandemic there, my focus was on drop shipping, and especially the drop shipping of eBay and Amazon there. Now there are quite good number of people in India and Pakistan who are teaching Amazon drop shipping or FBA Amazon there. This is something you can learn very easily. You don't need to have a good qualification there. All you need to have a good common sense to learn those old tricks there. So when I say you need to know about your strengths, I'm sure everybody knows my strengths. For example, I'm not good in mathematics. I bluntly accept that. Mathematics is not my favorite subject there. I'm not weak in it, but it's not my favorite subject. But having said that, I still studied the artificial intelligence and machine learning recently. I did learn Python as well, although by heart I didn't like that. But in order to understand the artificial intelligence, Python or relatively a new language R is the more important component of learning the machine learning or artificial intelligence. So you need to adapt. The message is that bank on your strength and try to understand what is your strengths there, and then find out what is best for you. Now, I would always recommend that do your homework before adapting a new line. I had a recent example of my house that for my daughter who wanted to do a corporate law. Now she's very much focused on doing a corporate law, and she had in this mind for last 6 months while she was doing A level or living cert that she is something she likes very much. She's good in argument. I'm just giving an example, a thought process there to corporate law. She did not got admission in business and law, because for corporate law you need to have a good line, rather business and law rather than straightforward law or LLB. And she got admission in LLB, and she said that look, that I can get into LLB, and then I won't be able to pursue my dream, which is a corporate law. So I need to have law and business. And I asked her, why you want to do law and business? And she said, look, I have a better chance in case something goes wrong in later stages. So I would have law and I would have business. So I can either take law, or either I can take business, or a combination of law and business is something like corporate law. So she's like, the youngsters these days are very much focused, and they know it more or less. More of the students who are very much focused in studies to know where they would end up. Not in my case, when I was doing FSC way back in Pakistan, that I didn't knew it. Whatever people guide them at that time, MBA was all over the world. Everybody was talking about masters in business administration, and people were talking about them. And everybody, all the friends said, "Let's do MBA." We did MBA. Let's do MP, public administration. We did it. So this, you need to be very much focused these days, rather than thinking what other person are doing it. You have to bank on your strength there. Rahat, Kazmi, I think so, is in the studio. Today we are going to finish this 3-part episode of Introduction to Accountancy, and I'm pretty sure you have loved part 1 and part 2. In case you have missed part 1 and part 2, there will be posted the links there of YouTube, as well as the Facebook Live, which we did it in 2 weeks. I'll see if I can find on Mr. Rahat. Sorry about my phone. Rahat, you're there?
Yeah, 1 second. Yeah, I'm here. Yeah.
All right. I can't see your screen there. Maybe it's just a wall brick.
1 second. 1 second.
We'll take a small commercial break, and in the meantime, you can, if you would. Rahat bhai, you're back there. How are you today?
Oh, very good. Thank you, Tauseef. I would say, a friend of mine sent me a message earlier on,
Mm-hmm.
and he said, Rahat, how was last 7, 8 months? I told him, thank God that I'm really grateful to God that we are alive in 2020.
That's
If
correct.
you save yourself from this pandemic, you're very
Mm-hmm.
lucky, man. You save your family by being a
Mm-hmm.
responsible person. You're
Mm-hmm.
very, very lucky, I think. So I think
That's
it's better is to save yourself, save your
mm-hmm.
family. Don't do anything silly. Don't do anything stupid. Follow the government guidelines. That's
Yes.
the best thing to do.
That's the best message, I think so. As being a trainer or instructors or online people, we can give it to our audience. Be safe, and once you are safe, then you can protect your family, your loved one, your people around you. So that's a sort of a responsibility. We use a term corporate responsibility, but that's something bigger than that.
Well, anyone who has a job, I think, they will also be playing a role in corporate responsibility because they will also be looking after their colleagues.
That's correct.
Sometimes a person might think I'm very healthy, I have no, anything serious, any other diseases, so I'll be okay. But then they don't think about anybody else they meet in the family, for
Mhm.
example, little kids, elderly people in the house, some colleagues they work with, and so social responsibility will be our corporate responsibility. If they work somewhere, they need to look
Yeah.
after other people as well who are working with them.
That's correct. Yeah. Okay. So are we ready to start the part three, the final episode of three-part series?
Yeah, let's check, please, if our
Yeah,
screen is
here
shared.
you
Yeah,
are.
let's make it a bit bigger, please. Let's make it a bit bigger.
You would have
Yeah.
to do it.
How to do? Okay, fine. Let's do it
Okay.
then. That should be good size, I think. Yeah.
Yes, that's correct. Then maybe we can recall it from first two, and then we'll move on to today's, if that's okay with you.
1 second. 1 second. Okay. Basically, let me just go back. Okay. But first of all, I'd like to thank everyone who has taken part in first two series and they've joined us today again. Because the idea was to make sure that you all understand the fundamentals of accounting, what accounting was all about. So most people, when they heard the word accounting, they get really nervous. They get really afraid. Oh my God, what the hell is that? It's rocket science. No, accounting is not rocket science. I did try, and I'll try again this third series as well to try my best to make sure that you all understand the concepts in an easy, in layman's or dummy language. Because it's just that's the best way you can explain to them. So when we started the first series, we talked about what bookkeeping was and what accounting was. So then we talked about types of accounting. In tax accounting in series 2, we talked about financial accounting, managerial accounting, income tax accounting. So these were basically tax accounting. We talked about them, and then my intention was to in episode 3 to talk about primary financial statements. Then realize that if we talk, there's three statements: the balance sheet, the income statement, and the statement of cash flows. So to be honest, if I had spoken to three different of statements today in the length of two people can understand, I'm sure we need about 3 hours.
That's
So
correct.
with
Yeah.
permission, I like to focus on one today, so it's better that people can understand,
That's
and we can
correct.
do
Yeah.
other programs for them, later on to go through income statement and the statement of cash flow.
Sure.
Will that be okay? No, because I've gone back to work, so I think it's maybe I think people who are expecting on us on Friday, I apologize to them. I think we can do probably sessions on Saturday or Sunday about same time. So as long as the people are flexible, we are flexible. So should we go on? Should we start?
Cheers. Please go
Okay.
start.
So guys, let's talk about the balance sheet. Okay, the balance sheet, as the name says, balance sheet. Balance sheet has two sides, and both sides should always balance. If they're not balanced, that means you have done something wrong there. Okay. So balance sheet considered the most awesome creation of the human mind. People will ask why? Because it's considered because it has an accounting equation. It's considered equally good as the energy formula, which was designed by Albert Einstein, the German physicist. He said E equals mc squared. Mc squared basically, he said energy equals mass of the body times speed of the light by twice. Speed of light times 2, or speed of light squared. So this is as important as that. The accounting equation is as important as energy formula. So in balance sheet, the accounting equation is basically assets equal liabilities plus owner's equity. On left hand side of the equation, we have assets. Assets are what? Assets basically we can see them, we can touch them, we can feel them, they're tangible. But when it comes to other side of equation, where say liabilities and owner's equity, so we need to, when we have liabilities, basically liabilities are what? Liabilities are what? When we create assets, when we collect assets. Sometimes if we use our own money, that becomes owner's equity. If we use money from a loan or some finance, that becomes a liability we have to pay back. We go through in details in assets. Assets basically, assets are quite few types. So every time we cannot buy all assets in one mode of payment. We cannot buy everything by ourselves. Sometimes we have to go to banks. Sometimes we have to go to some investors, and they help us around. And then we basically record everything. Okay, balance sheet is not a new idea. Balance sheet has been going on for more than 7,000 years. But no, I think in modern balance sheet, we have to record everything. Everything we do, everything, any transaction we have, as per the which relates to balance sheet, we have to record it down. All right. I think earliest people who used balance sheet was ancient Mesopotamians. These guys, they were farmers, for example, and the farmers, they recorded everything with, like for example, farmers, they wrote down the cows they bought, how many cows they had, how many sheep they had, how many sort of tools they had to sort of farm. So everything they did, they also recorded down where they bought it from. At that time, they used clay tokens. As we discussed in part one, clay tokens were at that time they recorded with them different shapes of clay tokens. They recorded to write down or maybe keep account of what they bought. And then later on, it went on to clay tablets. Then of course these days we have tablets like Samsung tablet, Apple tablets, and so on and so. But that time, people also did something. They also had record of everything. So basically, understanding assets is no rocket science, guys. It's simple as that. Okay, so if farmers at 7,000 years ago could keep a record of that, I'm sure in the modern day and age, 2020 or 2021 coming very soon, we can keep record of what we bought and how we bought it. Every time we buy an asset, we have to write it down. We have to make sure we record it, that where we got the money from to buy it. We need to make sure we record in balance sheet. We bought an asset. Why did we buy it? We need to write it down. Every time we buy something, we need to write down exactly the source of the asset, source of financing. Did we buy ourselves? If we bought ourselves, that becomes an owner's equity. If we bought from a loan or finance from somebody, that becomes a liability because we had to pay them back. Okay. So guys, in the two sides of accounting equation, the first side on the left hand side is assets, which are the real world thing. We can touch them, we can feel them. Assets, for example. So see where you're sitting there, the chair you have sitting on the chair, the desk in front of you, the mic, maybe the laptop, etc. Everything in your house, they're all your assets. Same as well in where I'm sitting as well. Anything you look at, you feel in your house, which you bought it, they're all your assets. So assets are as simple as that. Anything you bought to use now or for future, they're all assets. Okay, so they are tangible, But then second question is, on second part of the question is, where did we buy these assets from? Where did the money come from? Let me give you a simple example. I think some of you, or most of you, which are probably married, they have kids. Let's say you have a small kid, and a toddler, 4 to 5 years old. So let's say you come back from work and you knock on the door. The toddler opens the door and they start jumping and dancing, to see you because they're so happy to see you. You climb them, so hold them up, on near your shoulders and you lift them up. And then you realize, while you holding it, they got 50 pound note or 50 euro note in their hands. And of course, you'll be happy, you see they're holding an asset, but you will also be surprised and you might ask question, okay, son or daughter, where you got this money from? Where you got the 50 pound note from? Because from 4 years old, 5 years old, you won't expect to hold them 50 pound note in the hand all of a sudden. You need to ask them, where did the money come from? So similarly, balance sheet is just as that. We need to explain, we bought an asset, where did it come from? So we need to, if we bought ourselves, that becomes our owner's equity. And if we have basically purchased it through loan or finance or credit, that becomes our liability. Now let's go through in detail about definition of assets, what assets are, and we'll also go through some examples of assets. Definition is resources in a business, either controlled or owned by the business, which will provide future benefit. Okay. Sometimes we don't own an asset. We lease, for example, some businesses will have maybe company vans, company cars, and they don't want to buy it. They just want to lease it. So by leasing as well, because you, for the time period you agreed to lease that asset or that product, that is your property, because you are responsible for it. You have to pay them the value for it. If you lose it, you have to pay the full value. You lost it, you bought it. That's how it works. So until that time period, lease property is also owned by you. That's also considered as your asset. Of course, the difference is if you bought something, let's say even on finance, and after the period of finance is gone, then becomes your property. But lease property, lease items, lease car, lease van will have to go back to the lease provider. Okay, it will now become your property. But during the time of the lease, it'll stay as your property. It'll stay in your asset side of the balance sheet. Okay, let's go through some examples of assets. First of all, I'm sure all of you are aware of Apple. I'm sure most of you have Apple iPhones. Maybe sometime you might have Apple MacBook Pros or Apple iPads, and Apple watches and so on. So it's a big company. So Apple balance sheet shows that they got lots of cash, guys. Not only small cash, in billions of dollars. And when we say in our business world, cash is a king, that means Apple has a king. That means when they have the king on their side, they can grow easily in future. They can go a long way. They can have new sort of what you call it, new experiments and new products. They can bring new additions to the current products they have in the market, or they can do more innovation in the future. That's what basically means cash is the king. Next example is from American Express. Well, here let's talk about something else. Another part of asset. Another type of asset is accounts receivable. If some of you don't know what accounts receivable means, basically, let's say we buy things, we sell things. Okay, so when we buy things, that becomes accounts payable. If you don't pay them cash straight away, we borrow from them, and then let's say we have a contract with them to pay them back in 30 days, or 60 days, or maybe even 15 days. Sometimes it's even 7 days. So 7 days, 21 days, 28 days, a month, 2 months. That's really the term of credit. If you're a bigger supplier, you will easily get a credit from anyone. People give you a credit. That means you'll buy all the products, most of the products on credit. But as soon as they come to the company, you have to record them as assets. At the same time, you have to also record them in your liabilities as well, because then you have to pay them back. But when you make a sale, you sell something to your customers, and let's say you had the same agreement with them that they don't have to pay you cash straight away. You have to basically collect the money from them later on. You send invoice to them, they pay you later on. And when they owe you money, that goes in your balance sheet as accounts receivable, because people owe you money. Accounts receivable is basically it's asset. It's current asset. People will pay you either in 7 days, 21 days, 28 days, or 30 days, or 60 days, depending on your basically agreement with them. Okay, so let's talk about American Express or other card companies. Accounts receivable is the biggest asset of the companies like American Express, MasterCard, and Visa. The client signed the contract. We signed the contract with the credit card company. We're going to use their money, and then we're going to pay them back. But how it works? What's in it for American Express or other card companies? They charge us a big amount of interest. Typically 29 point something to 35, 40% even APR, or interest rate. That's very expensive. Okay, but the profit they make, they make huge profit from us, guys. A lot of profit. When we go through the credit card spending, people don't realize how much how much the trouble they are. I would say when people have got credit cards, more than one credit card, they're definitely in trouble. They don't realize it, but they are in trouble. I'm just saying, because we all make mistakes. To see, I made mistakes as well. There was a time I had a American Express gold American Express card, and then at that time you feel like a king. I got money, but that is not really your money. You keep spending money, then you have to pay it back, and sometimes if you don't do your job, then you're stuck there, and you have to go through all the different procedures of paying the debt back, and you go into lots of financial difficulties. So these companies, they will sort of lure you into it. They might give you initially, let's say, 500 euros, 500 pound of credit. You pay them back straight away. Then they give you 1,000 pound or 2,000 pound, goes up to 5,000, 10,000. It goes up. You become a good customer, but then you get more credit cards, and you can't pay them back, for example. Then you're in trouble. Let's take the example of Citibank. Citibank has over $1 trillion worth of accounts receivable. Can you imagine? A lot of people owe them money. Okay, $1 trillion. I don't think Pakistan has even that kind of budget in the year. or even smaller countries like Bangladesh or Nepal, etc. So $1 trillion, one company, American Express, So see, a long time ago, back in 1995, my dad came to visit me in UK. That's the only time he came, and then he passed away in 2009. When he came, I took him to Oxford Street, and we looked at some, big stores like John Lewis. We looked at, Selfridges, and he says to me,
Mhm.
if you own a store like this, you don't need to be prime minister of a country like Pakistan, India, Bangladesh. You're well off. You're better off without,
Mhm.
being prime minister or even in politics. So these companies are huge. The corporations are huge.
That's great.
Okay, just let's take next example of
If they could survive.
if they could survive. Yes, of course, over the time they learn the tricks. They of course, uh, John Lewis is another example of. But here we talk about different kind of assets. Here we talk about inventory and buildings because we talk about receivable, we talk about cash. Apple has cash. We talk about receivables when people owe you money. They bought goods and services from you. But then let's talk about inventory and buildings. If people who are not aware of John Lewis is a luxurious departmental store in UK. It's very set up, famous for middle class, upper middle class, rich class. They all go to John Lewis do shopping. John Lewis, they have admission statement are never knowingly undersold. Very good company. I wouldn't hesitate to buy from them because their products are very good. Their customer service is excellent, and they will not, as they say, mission statement. They always will be very fair with you. The prices are expensive, yes, of course, but they are a company which you can rely on. So let's say we drive to a John Lewis store, or it could be any other store. It could be any other store from anywhere you are, a bigger store. Let's say you drive to the store. First of all, you park your car, or let's say you're walking. You just enter the car park. The moment you enter the car park, that's where their asset starts. The car park is owned by them. Car park is their asset. When you look at the big building in front of you, that big building is their asset. Building block, etc. They're all the assets. When you walk through the doors inside, you look at all the shelves. All the shelves full of clothes, full of home furnishing products, everything else, counters, tables, chairs, etc. Where you see everything which is sold there in the store, fixed and fitting, equipment where they keep things on hold. Everything there, they're all their assets. So from car park to the building to inside, everything else is basically they're all their assets. So the inventory, the stock we have there to sell, building, everything is assets. So basically, these days, company like John Lewis would have very intelligent systems. So every time something is sold, it informs the warehouse in the back. These things have been sold. So they order straight away. They get lists of things which been sold every single day. So they'll never, keep the shelves empty there. There's all plus, there was a time to see if when we had, people were thinking, if you buy in bulk, you save money. The people used to buy in bulk and stock it up in the storerooms, and then they say we bought a lot cheaper. But then at that time they used to forget the cost of storing that products. They might need to hire or buy a warehouse, electricity and gas of warehouse. Then people who will control the warehouse, their wages, delivery costs, everything else from delivery from warehouse to the actual shop outlet, etc. They forgot all the costs. So these days, people don't believe in the storage anymore. You have lots of companies. They will have real-time suppliers. You need something, you go online, you send them an email, or you make a call, or sometimes you can even get some system like purchasing systems or procurement systems. One of the good systems I know in the UK is called Procure Visit. You have a system installed on your desktop. Your customer supplier will also have system installed on the desktop as well. It's a mirror image copy of that.
Mhm.
Whatever you need, you make a list, send them through system all the lists they need. They got information in real time, and they will acknowledge, and you got acknowledgement receipt that they got it. They'll give you time. One time will come, the delivery driver will come, and they will deliver everything with the person, and they have little tablet in your hand. They'll mark what they got. If you don't have everything, you cross that one that we didn't get that. So supply will know that they short delivered some item, and then the other will send you a refund for that, a rebate for that, or maybe they'll send the replacement in a few days time.
I just want to give you an example for today.
Sure.
For UK, one of my client, I booked up from Amazon, and within 5 minutes, I got an email from Amazon that it's going to deliver on Sunday, not even Monday, Sunday if you have a Prime subscription with Amazon. So that's the height of a good customer services, taking care of your customers. A good example.
It's because to see if if you have a drone, for example, a drone doesn't mind working on Sunday as well. So they might be delivering by drone. I might, might be,
Even now they have been delivering by drone, but their network system is so optimized that you place an order in on a Saturday afternoon, and you get a email within 10 minutes that is going to deliver it on Sunday, where most of 90% of our people all around the world are of the state of the mind that Sunday is holiday sort of a thing, that and nothing happens other than family there. But here you are, it's going to be delivered on Sunday.
you're right. It's great. Definitely. Very impressive. I think their service is very good. I've been buying from eBay and Amazon, I think, but I think eBay is not the same anymore as it used to be 5-10 years ago. But I think Amazon, their customer service really is outstanding. Definitely.
That's correct. That's correct. Yeah.
Okay, another example we have is British Airways, an airline company. How do we define their assets? Aeroplanes. When you go to airport, you see a big aeroplane. Okay, to see if there was a company in Ireland. I once went for a job interview that I was hired at the time as a balance sheet accountant. So I think company was called, I think, forgot the name of the company. They were an American company based in Dublin. And on the website, it said they had more than 12 billion of assets 12 billion euros assets in Dublin, in Ireland. So on the website, it said 54 aeroplanes, passenger planes in Dublin. So when I met with the person who was interviewing, he said, "Oh, Rahat, we got 45 aeroplanes." 45 aeroplanes? Are you sure? Because your website says 54 aeroplanes. Can you imagine if one aeroplane costs 200 million pounds? So there's big discrepancy there. 54 to 45.
That's correct. Yeah.
9 aeroplanes are missing. And really? He checked straight away on the website. He said, "Oh, yes, you're right. We'll get it changed straight away." That's really misleading to our stakeholders. Anybody who wants to invest in a company, they might think, okay, they like to us.
No. They were the stakeholder doesn't like. They want a transparency in balance sheet. At least.
Of course. So basically, aeroplanes like British Airways, Emirates, Virgin, all their planes are their resources. Resources because they have to use these resources to transport their customers. I mean, who are the airline customers? Customers, passengers, who travel from A to B, their destinations. People buy tickets from the airlines, and then they travel their airlines through the aeroplanes. So aeroplanes are the resources. Like if you go to a restaurant, the kitchen on the back, the big plants in the kitchen, the big cookers, are all resources to provide product service. Yeah. So these resources are the assets which will provide future monetary benefits, because if they have aeroplanes, people will travel in them. If they have jumbo aeroplanes, etc., whatever they have, they will have different resources, different uses of them. Customers will use services of travel by purchasing the flight tickets. Yeah, that's basically an example of assets which are owned by British Airways or other airlines. Okay, next one in balance sheet comes liabilities. Let's first of all talk about what liabilities are. Definition of liabilities: obligations which may require sacrifice of future economic benefit in the form of transferring assets or providing services. So when we say economic benefit, if let's say we're just talking about basically British Airways. If British Airways taking passengers from one place to other place, they are basically sacrificing their petrol costs. They're sacrificing the wages of the people who manage the plane, the ground staff, the people who will come and clean the plane, catering services. So they're all sacrifices, and sacrifices because people will pay them in return. So when we have liabilities could be that we could have two kind of services from people. One is product, one is service. Product is basically when you sell something in physical nature, and service is when somebody has given you some time. For example, if I work somewhere as a corporate trainer or a lecturer, my time is my service. My service basically is given in time. As we say, time is value, time is money. My money is my time. So basically, in that way, guys, services are like that. Yeah. So we provide services, we provide products. The sacrifice of time, sacrifices of product we're giving them away. Yeah, that's how liabilities create. Okay, let's talk about accounts payable, which is one of the biggest element of liabilities in balance sheet. And let's say we also go through John Lewis example, which we talked a few minutes ago. Payable word as a word shows payable. That means it has to be paid back in future. We can't keep it up. We have to pay it back. Now let's take John Lewis example. John Lewis is such a big company. They have stores all over UK and they got stores in other European parts as well. But John Lewis, when they buy things from suppliers, they don't gather them all on the door and evening say, okay, guys, let's pay you all cash. How much owe you? Here's cash. Come and take the cash. They don't do that. So they will basically, and people, to be honest, John Lewis is such a company, such a big company. Their suppliers will not say no to them even to give them credit. People will be happy to provide them credit and give them, things on credit so they can pay them later on. Even if they don't pay them on time, I'm sure suppliers will still be very quiet. They'll be still very grateful that they got their business because it's such a big company. Yeah, that's such an advantage of being such a big brand. So John Lewis does not need to pay all suppliers by cash, but they can when they purchase their inventories. But they promise to pay them in future. As we discussed before, it could be 7 days, it could be 14 days, 21 days, 30 days, 28 days, or 60 days even. Depending on the supplier or type of supplier they have, depending on the amount of money they borrowed from someone. So this is basically, the amount, the promise they make to them, obligation. Yeah, this is obligation. Promise they say they will pay you in 7 days, 14 days. This is obligation. Obligation basically is like also a liability. Okay, John Lewis will have to record the purchases. If they buy from so many suppliers, they can't write it down on back of tissue. They have to write it down. They must have some good bookkeeping system or accounting system where they can record all the purchases, how much money they owe from each person. Okay, so when they buy on credit, we need to record them onto asset side because of course they're assets. They're selling them. Of course, when they buy some item, they will sell the item as profit. So profit will go on one side. The cost of that item, which the buying price, will go into liabilities because they need to pay it back. Okay, so this is how we record accounts payable. Is basically when company will buy some asset from somebody on credit, the actual item itself is registered, and when it sells as an asset. Asset value will be in profit. The cost difference between the selling price and the buying price, that will be profit, and the actual buying price will also be recorded into liability side. So is anyone asking questions? Any live audience or something? Please, if you see anything, please let me know that I can go through as we go along. Because let's talk about another type of liability. Another type of liability will be wages payable. When it comes to wages, guys, just like John Lewis, British Airways will not gather all their ground staff, all their sort of air staff. Come guys, let's pay you all. How much were you every day? How many hours do you work? It won't happen like that. Actually, I don't know any company who does it, apart from maybe a local corner shop might do it. But I think all the bigger corporations, bigger companies, they will have a set system of payment. Or payroll will be either monthly, mostly monthly, because it's easy, it's convenient. But some service companies might do a weekly payroll because let's say they have lots of turnover, they might have some lots of casual staff, and they like to pay people. If they can't they can't wait for the money for 2 weeks, they might pay them every week. But every week is a headache. If you pay people every week, you have to go through the same process of going through paying everyone the wages, working through their hourly count every week, and then record them, send a file to bank to pay them all, then print their wage slips and P45s, living certs, and all that. So it takes long time. So I think most companies will do either bi-weekly, which is 2 weeks, or monthly. Okay, so British Airways will not call everyone to pay them cash in hand. I'm sure they need to have a good system. So guys, wages are always paid in arrears. Okay, they're not paid on time. They're not paid on daily basis. So they're paid in arrears. Let's say a person goes to work for 30 days to see, and in 30 days or 31 days of the month, every day the person goes to work and comes back from work, he has earned income for that day, but not been paid yet. They'll get paid after 31 days. End of the month, they get paid for it. So they earn the income, but not get paid. So because they earn the income, that becomes liability for the airline to pay them back. So that goes into so that's why we call it wages payable. Every time people work, the whole staff, it could be admin people, could be even a rank and file, could be team leaders, supervisors, managers, line managers, head of departments, C-level people, everybody who works for the company, their wages which have not been paid, they become a liability or wages payable by the company to supply. So I think British Airways is just an example. You can have any company you work for, you have worked before. You can think about that as an example. Every time you didn't get paid till the end of the month, your wages to them were your liability to them. They owe you money for that.
I think so. This weekly payment system or a fortnightly payment system is much more common in UK, Ireland, and probably some of the countries of a European Union. But in Middle East and in Pakistan and India, for a matter of fact, and Bangladesh and all majority of Asian countries, it's monthly rather than weekly or
To
fortnightly.
be honest, I prefer monthly because monthly is like easier for the company. You're doing payroll in. It can really sort of make your life easier. When I worked in, you remember when I used to do some get-togethers in Carlton Airport Hotel.
That's right. Yeah, yeah.
I worked for them at that time. They had 7 hotels in the country, and in 7 hotels we had one person who was doing payroll, and that one, each hotel had 3 people there. Okay, one was accountant, that's the financial controller. Second person was assistant accountant, and third person was a clerk or admin. So I was their group auditor, so I basically go around to different properties and help them, support them in many ways I could. So the person who was doing payroll, they would take 2 days, complete 2 days. Every hotel had probably 100, I think, staff on average. So to pay 100 people, they will take 2 days. They will close the door, do not disturb, sign on. People can't talk to them because they're doing payroll. And it was such a nightmare. They will not help in anything else. I'm doing payroll every week. So I
That's
spoke
correct.
to my director of finance. I look, he was old school Irish man. So look, come on, guys, we don't need to take 14 man days to pay people payroll. We can do that, in half a day. He says, Rahat, get lost. I said, what mean get lost? I can show you. I can prove to you. Maybe just because you haven't seen it, you haven't heard of it, that doesn't mean it doesn't exist. I mean, modern America can show you where it comes from. So I can call a company who could do payroll for them. At that time, there was a company called Quantum Payroll. Quantum Payroll guys were, I think they were ex Sage Payroll guys. So
I
they
think,
left
yeah.
Sage, made a company called Quantum, and they at that time, back in, let's say, 2009 and 10, 8, not 2007 and 7, 8, I think. At that time, they made a system which was very much Excel based. You could do payroll, you could export, a timesheet from Excel into from payroll to Excel, fill all the number of hours in. It had name and everything, the rate of pay. You just fill the hours in and import back in. When you import back in, save it, payroll done. So
That's
I did
right.
the first payroll in the head office. I think it took me about 6 hours for 7 hotels, let's say 700 people and stuff. And then we hired somebody. We trained this lady. First time she did was, I think, 2:30 or 3 in the afternoon. And then she could do everything by 12 o'clock lunchtime, and everything was done. Our payroll. Can you imagine? We did all the work in half a day instead of 14 man days, which used to take before.
I know, yes, the Sage is quite popular in Ireland. I'm not sure about UK, but definitely they are the number one payroll processing software in
Which one was it?
Sage. Sage.
Oh, yes, yes.
Yeah.
Sage, Sage. The reason Sage didn't prosper that time because Sage was not very flexible at the time when I was there.
Yeah.
But no, I'm sure other people who left Sage, they made their own companies. They must have woken Sage up as well. Come on, guys, do something. Be more creative. Be sort of more, sort of open
Yeah.
to changes.
Yeah. No, they are very quite popular in Ireland. I'm not sure about the United Kingdom regarding the payroll processing for Ireland. Definitely, if I say they are very popular.
Sage also is very popular in UK for small and medium enterprises. They all use them
For
uh,
bookkeeping.
for bookkeeping. Yes, a
Yeah.
Sage payroll is part of bookkeeping. It's sometimes it's built in. Sometimes you could buy Sage payroll separately as well.
That's correct. Yeah.
Okay. And another example of liabilities is, let's say, taxes payable. Okay, I'm taking the example of British Petroleum at BP. BP, as you know, this British company. You can take example of any other company we should know of. You worked in it, maybe you heard of them. Their taxes are liabilities. So if you don't keep paying taxes, they keep adding up, and then they become quite complex. It's better for a petroleum company to keep paying the taxes as they go along, because taxes are basically a liability which sits on balance sheet of the company. So BP will have much more complex, bigger accounting system to deal with tax, because they will have various taxes. They've got taxes in the form of property tax, sales tax, import tax, export tax. All these taxes from different countries, different taxation laws. For example, if they're working in UK, there are different corporation tax rate. If they work in Netherlands, they will have different corporation tax. If they're working in Ireland, they'll have No, hunky dory, easy peasy. 12.5% tax is a lot easier. Is working Middle East, they will have different taxes to pay in North America, South America. Of course, so all these complications they have to deal with them as one company. So there are different systems. They'll have tax teams, tax teams working for them, and tax team will be specialists in dealing with tax matters. So, like wages, of course, British Petroleum and BP will not pay tax to taxman, cash in hand. They like to sort of register everything in their balance sheet and pay them through tax returns. Tax returns, whenever it's depending on which country has when tax return is due. But in UK and Ireland, I think it's every 2 months you have to submit your tax returns. But when it comes to corporation taxes, you have to pay. Government will give you extra 10 months after your year is finished, because they'll give you time to sort of balance your year and etc. and make sure you get no lesser. You recover all your money, because tax, as we discussed in part 2 of this course, government doesn't expect you to pay taxes as you earn revenue. Like the people who are working in the job, when they come home from work, they have earned revenue, they have earned income, but they don't get paid until end of the month. So similarly, as a business, you might earn revenue, but you don't get paid for it. Until you get paid for it, government will not ask you to pay taxes. Okay. Another example of liabilities is long-term debt. Now this one I'm going to talk about really very, very weird example. Okay. Most of us know when it comes to long-term liability basically is when we say short-term liability could be bank's overdraft, could be maybe somebody we need to pay them back in within a month's time, up to a year. Let's say up to a year. But when it comes to long-term liabilities, they start from 2 years to 5 years time, 10 years time. If it's equity loan, etc., it could even be 15 to 25 years time. But here we know that some companies like Coca-Cola and Walt Disney, they issue bonds for 100 years. 100 years. They've taken loan from companies for 100 years. Can you imagine? 100 years loan. We don't even live that long. Depending on where you live, your average lifespan could be 60 years, 65 years. But those companies don't think like that. They might think our company set up 1857, 1840 something. It was owned by their great grandfather, was passed on to grandfather, then passed on to their dad. They're running it, but then they want to leave this to great grandkids even. So for them, they like to look at the benefit of the company, benefit of the corporation, instead of looking at the short-term side. They don't have short-term oversight. They're thinking outside the box. How the company will benefit. Of course, 100 years is a long time. That means when we have loan for 100 years, it would be quite expensive. But then what the hell? We have to pay that in 100 years time. So it's not a big deal, 100 years time. So similarly, what I'm going to say is, if we take mortgage on the house, mortgage really is, depending on your age, etc., 15 to 25 is 30 years time. So let's say Tauseef, we bought a home on mortgage, let's say 300,000 euros. We had cash in hand. We paid 50,000 euros as deposit, our down payment. So 250,000 euros over 25 years time, roughly speaking, will end up paying more than 500,000 or 600,000 euros back to them. 25 years time mortgage. I'm sure 100-year loan, 100-year mortgage will be a lot more expensive. But if you have to pay them back, because for example, Walt Disney, they had agreement. This agreement, 100 years bond, started in 1993. So this will mature in 2093, basically. But if they were able to pay in 30 years time, which is 2023, they can still pay it off. That means if they pay in 30 years time, they'll be paying a lot less interest. Their cost of capital, the cost of loan will be a lot cheaper if they had paid in 100 years time. But they had option there. Option is they can pay back in 100 years time if they want to. They can pay back in next century easily. Example is not only about corporation, but also some countries like Argentina, Austria, Mexico. They also issued 100 years bonds. Yeah. So basically, this is not very common, but it happens. It does happen in corporate world. So I think, in my opinion, it was better for you to know. Everyone knows that they are. When you talk about long-term liabilities usually are considered 5 to 25 years. But guys, no, hold on. 100 years liabilities also exist in this world. Okay. Next type of liability is basically unearned revenue. Let's take example of British Airways again. Okay, I'm going to ask a very weird question. Tauseef, either yourself or anyone you know, have you ever traveled by an airline? Of course, you have you have maybe Ryanair, very famous airline in Ireland.
So I've flown from British Airways and Virgin as
Okay.
well.
No, I mean, I'm sure you have, but what I'm saying is very famous airlines in Ireland are other Aer Lingus and Ryanair or any other
Ryanair, yeah.
Ryanair.
Air Lingus
Or
and
any other
Ryanair.
airline you can think of. Have you ever traveled by an airline? You book airline, you made a booking, you didn't pay for the booking. You travel, you came back, then you paid them at the airport when you were leaving. You pay, okay, hey guys, I traveled, I just came back, here's my money, cash or credit card.
No, it's all advance.
It's all advance. So no
Hmm.
airline will accept that. No airline will
That's
let you
correct, yeah.
pay afterwards. They always
Hmm.
ask money in advance.
That's
Sometimes we
correct.
pay money even in a year in advance.
That's correct, yeah.
Yeah, when I moved to Dublin from Amsterdam, as you remember, at that time, for a year, when my wife was living in Dublin, Ireland, in Amsterdam, I used to go back every weekend.
Hmm.
I used to come back Monday morning from Amsterdam to Dublin and go back on Friday evenings.
Hmm.
So for the whole year, I took I think 48 flights at least. So I
Hmm.
knew all the Aer Lingus pilots, when they landed, what kind of landing they had. Each pilot I knew the names. Okay,
That's
this
correct.
pilot today we got Seamus. Okay, Seamus. Oh, terrible parking, terrible
Hmm.
landing. Okay,
Hmm.
somebody else, maybe we've got some, Lionel. Lionel is here. Okay, Mike. Lionel, he will have, very good takeoff. So I knew all
Hmm.
the pilots through the landing and their takeoff.
That's correct.
So,
Yeah.
so basically, I used to book flights in advance,
Hmm.
4 to 5 weeks in advance to get the right value. Otherwise, if you had booked the flight day before,
Yeah, you
I wouldn't
get
be
a
able to
good value if you book in advance. Yeah.
yeah. So basically, what happens, your advance payment for a service which you have not received yet, it becomes obligation or liability to the balance sheet. So if we book a flight, let's say we book a flight for 3 months in advance.
Hmm.
Let's talk about Aer Lingus or Ryanair. We booked a flight to Ryanair or Aer Lingus. We paid for it. In the balance sheet, our money sits as liability. So they
Hmm.
owe us money. They
Hmm.
need to, of course, if they don't provide the service which they promise, they have to give us the money back.
Hmm.
So to sort of digest that money or eat that money, they had to provide us that flight which they promise. They need to take us from destination A to B where we need to go, where we intend to go.
Hmm.
Yeah. So this is basically very normal. They had to do that. They had to take us to desired locations. Okay, next, let me talk about one example here of airlines. United Airlines, they have collected $3.4 billion from people which they have not provided flights yet.
Hmm.
I recently had a weird experience with United Airlines, not personally myself, but my wife.
Hmm.
She was supposed to go to California through New York from
Hmm.
London. So they booked a flight, I think, herself and her aunt, I think, with United Airlines back in February and March. At that time, they were told, no, America is locked down, so you can't come to America. So her flight was cancelled, but
Hmm.
they got the credit note.
Hmm.
No refund,
Hmm.
credit note.
I was going to say the same thing, but you just snatched words out of my mouth there. It happened to my wife as well. She booked for Pakistan, and twice she booked it, and they
Uh-huh.
are all keep on saying you can have a credit note, but no refunds there.
See, this is a gimmick. They want to keep the money because at the moment they're not very busy,
Hmm.
and they want to keep because when they keep the money from you, they
Probably they
can
are
flow.
operating. They are operating on lost at the moment, maybe.
Most of them are, but see, if they give you
Hmm.
money refund straight away, that means their cash flow is in trouble.
Trouble
So
there.
they don't
Yeah,
mind keeping your bad cash flow, but they like to keep themselves.
that's correct. Yeah.
So basically, my wife, she had tried to cancel in February, March, and
Hmm.
she booked again about a week ago. So basically, when flight booked, so she's very happy. She basically spent all time, unpacking her bags and everything. She also did the ESET, visa online from American immigration.
Asta.
ESTA was
Yeah,
all done.
Asta. Hmm.
It all came back okay. Of course, if people don't know what ESTA means, ESTA basically, it's not like same as India, Pakistan, where you have to go to embassy and send passport through maybe what you call very
It's called a
bureaucratic.
pre-screening of the EU national peoples there who are based in EU. They don't need to get a visa, but they need to do a pre-screening. So that's called ASTA,
You
ESTA.
fill a form online, basically, write your
That's right.
passport,
Yeah.
study date, everything, purpose of visit, and then they approve it.
Hmm.
So, amazingly, her ESTA came back approved as well. Visa was approved. Airline give the ticket. So, visa everything is fine. I woke up very early in the morning, took her to the airport. I said, okay, I'll wait in the parking. You go in there, please, and let me know. She called back, no, please don't go anywhere. I'm in trouble. What?
Mhm.
She went to the airline counter and said, "No, please, madam, see the airline immigration officer first." Immigration officer said to her, "Madam, you're going to America?" "Yes." "Why?" "What do you mean why? I'm going to see my family there." "But you can't go. We're in lockdown." She said, "In lockdown? You are locked down in March. We're still in lockdown. But why didn't you inform me?"
Hmm.
"What do you mean, why didn't you inform me? You come." And she said, "I applied for ESTA visa. You
Hmm.
guys approved my visa. You could have said to me, no, you can't go. You could have refused my visa. Then I know
Hmm.
that there's something wrong." I
Yeah.
spent all evening yesterday, packing my bags, came here, and then airline, when I booked on airline website,
Hmm.
no window popped up. "No, I'm sorry, madam, you can't go. Only these people can go."
Hmm.
I had to go to Canada to, my mom died last year in November, so we had this my mom's first death
Hmm.
anniversary. So I had to go
Thank
there as
you.
well in November.
Yeah.
I realized when I went to their site, you can only go either you're son of someone, daughter of someone, wife of someone, spouse,
That's
kids
if
only.
you are blood related there only.
I mean, I saw our sibling better little bit. My family lives a sibling lives there, but I could not go because
I know. Yeah, no, they make it as vague as possible because they want to take your money there. And having said that, they also say that it's your responsibility to check with the airline or the website from time to time. They put everything burden on your shoulders there.
when you call a line, they say everything is on websites. When website doesn't show everything, so
That's
basically,
correct. Yeah, it's
that,
hidden information.
being I don't think this is social good corporate social responsibility from
Yeah,
airline.
and I understand that, but they are all in trouble, more or less because it's not of themselves, but because of this pandemic situation. So they're just trying to, survive in the difficult times. That's what
And
they're trying to
everybody's
do.
in trouble. To see if even people in trouble.
Yeah,
People
and I
doing the job,
understand. I
so
understand that. Yeah,
it's not fair on people as well to put all the burden on people.
that's
Don't
correct.
give the
Yeah,
money back. I said, "I will give you a refund. We will give you credit note. Travel again with us. You can't get money back."
that's
So
correct.
that's also not fair.
Funny enough, like I was telling, it happened with my wife. She bought one time with a Rahat credit note, and she said that okay, let me try another airline. So she tried with the Turkish, and in the same case, another credit note. So that it's the same story. I said, why you wanted to try another thing there with another line? She said that might be I would be able to travel there. I'm sure she could be travel now, but she can't travel now because she has her own work obligations at the moment.
Of course, of course. So can you imagine United Airlines, they have $3.4 billion money collected from people which they have not provided flights yet.
Flights,
3.4
yeah, yeah.
billion. Can you imagine this? It's a big money. It's a big chunk of money.
It's good amount of money.
So guys, this was unearned revenue. Examples were for unearned revenue. That means until they provide flights, this money will not become their assets. This is still a liability. Okay, until they provide flights, this money will not transfer to their asset. It will not become their cash. Although they got cash in the hand, but this money will not show in the balance sheet on the cash side and asset side until they have provided a flight.
Mm.
Simple as that. Okay, next thing in balance sheet is owner's equity. Okay, we talked briefly before, but let's go into detail. First of all, let's define what owner's equity is. The amount the owners originally invested in the business and the profit they have left in the business, which is also known as retained earnings. Ownership interest in the company's assets. That's all owner's equity. Basically, let's say we have two owners of a business, people who invest the money in the business initially. So this will become the percentage of ownership in the business, a percentage of interest in the business. If they all are equal partnership, 25% each, that means they will have 25% interest equally, all partners. If one person only has 30%, other people have, let's say, three partners, 35 each. Of course, then will be interest will be 35% for one, and 30% for one, and 35% for two other. So basically, generally speaking, the two ways we can buy assets for business. We can either borrow the money from somebody. We can borrow money from a bank. We can take a loan. We can take maybe equity loan. Investors can invest money in the business. That becomes a liability because we need to pay them back. If we spend our own money, owner's own money, that's considered owner's equity. Okay, owners might might have some saving. For example, they might have made money from another business, or they might be working somewhere and saving money and invest money in the business. So all their money basically sits in asset side. When owner's equity is basically it's money which company owes back to the company, back to the owner until it's paid back. It'll be sitting as liability to it's this kind of liability basically to be paid back to owner until owner takes money back. Business can make its own money and then. But I think balance sheet will never change. Balance sheet will always some sort of owner's equity because original capital is always there. Sometimes you make some drawing, but then more time you invest money back again. And also, a lot of governments in Europe, they have this kind of scheme. If you reinvest in business again, in growth of business, you get some tax deductions. You don't pay all the taxes. That's why most businesses, they open new branches, because then they save taxes like this. Okay. Owner's equity also has other names. It's also known as paid in capital, capital stock, capital contributions. All these names, if you hear of any of these names, this basically means owner's equity. So this is one form of investing, guys. Okay, when invest in business, investing in business can only be cash, can only be owner's equity, or can only be basically liability. Basically, when you borrow money from someone, when you use your own money as the owner's business, that is owner's equity, or it could be capital stock, capital paid in capital. Yeah, those all kind of names. Okay. Another way of investing in business is basically which business generates income is makes profit. Obviously, the income, when business makes profits or income, all these belong to owner of the business. So owner can do basically what they like with it. They can go crazy. They can treat themselves. They can maybe go on to a luxurious holiday in a yacht somewhere. They can buy a sports luxurious car like Lamborghini or something. Okay, we made profit. And if they take the money out, they pay themselves. They are considered as dividends. If they are clever, they are intelligent, they like business to grow, they can reinvest the money in the business, which will be considered as retained earnings, and then basically money will be reinvested in business. Yeah. So they can make more money in future, or they can, even with that money with the reinvested, they can buy either new building for the business, new equipment, new shelves, new sort of fixture and fittings, anything basically to enhance the business performance. Let's say, we take example of PDQ machines. A PDQ machine where you pay with credit card. I was working for Giorgio Armani, and they had 2 hotels in London back in about late 90s. At that time, the London Metropolitan Hotel, they had the credit card system in their what you call it, keyboards. Keyboard for computers. In the keyboard, basically, you slide the card through on the front, and you used to take the money. And then at that time it was quite fast, but before that, when we went to PDQ machine to pay a shopkeeper, and the PDQ machine will say dialing, and look at it again after a few seconds, say dialing. It used to take an average of 2 to 3 minutes, and then by the time you paid it, there'll be long queue behind you. But can you imagine if another company you go to, another shop you go to, and they have a very sophisticated machine, you touch and go, and then in 2 seconds payment has gone through. You say, you got a reservation number, you're free. Will you go back to again where it said dialing, or would you like to save your time and go somewhere where?
Yeah, it's all about merchant solutions.
So this is how we need to reinvest money in business, so business looks good in front of the customer's eyes. Customers these days, they are very choosy because there's so much competition, guys. So we need to make sure we enhance our business. We enhance the way business is run. Okay. Okay, Tauseef, I think we already done more than an hour. Can you imagine if we had covered 2 other financial reports as well, then we'll be taking forever. So we can do one at a time, I think. So I will say, any questions, guys? Any question anyone has? Is there any post there? If you have not listened before, please feel free to leave.
Most of the people are saying hello, hi, rather than asking a question, but that's quite normal.
Okay. If you think of a question later on, guys, I'm more than happy to answer the question for you. Leave me a note there under the video link, and I'll be happy to answer you, or maybe send you a message back. Plus, we also got our social media links as well. You can send us a message there if you like.
Thank you, Rahat, for today. It was a very enjoyable session. At least I enjoyed it, and at the time there were 25-30 people watching at the time. I'm sure they would have enjoyed as well. It was quite informative, and it was a quite revealing for me as well after such a long time, after being away from accountancy studies there, for the years there. My domain is the digital marketing and artificial intelligence, but never said that you're never away from accountancy. That's the way you practice every day.
See, Tauseef, I actually had promised, that my course will even be understood by housewives. If somebody is housewife, they also will be able to understand it. It's not even somebody who has a self-made person, or even one sole trader will also be able to understand it. It's not difficult though. People are just afraid of it. I thought it will make it so simple. And you can understand how it is. Because most of the time when you own a business, you have to do most of the things yourself.
Yeah, I know that. And we do it every day. It's just that we have to be proper organized in accountancy, like you said, that have a proper system. If you don't need a sophisticated software or a sophisticated computers to do it, you can just do it. There are plenty of good apps available on your smartphone these days.
Excellent.
That's right. Thank you, Rasa, for today. Any other thoughts you want to discuss it before I say goodbye to you and concluding remarks?
No, thanks for including me in the post, Tauseef, and it was a pleasure again to be with you, and hopefully we'll do it again in future. And I'm really glad during the COVID-19 lockdown we're helping people. We're at least being useful to them.
That's correct. Yeah. All the audiences who are listening and who had listened part one, part two, and now final part three of that, the thought behind delivering this course is to get you some information. I know most of us are not inclined towards accountancy. That's all right. It's a very specialized subject. But having said that, it's something I discussed in episode one, that it is a career to recognize, or career you could for especially young one who have done just recently A levels or living cert in Ireland, that we these days have a lot of a pressure. Those I'm talking about the young students there, that you need to go to do the MBBS, like a doctor, or you have to be the do the biomedical the sciences. These are very quite on, or even for the matter of fact, as I gave an example of my daughter in law and business there, or law itself there. These are the quite 4 or 5 there domain, and then another domain which is a software engineering. But having said that, there are plenty of other domains there which needed to be explored. Accountancy is there. I don't know how many years, a million years before people used to do so. Like Rahat Saab explained very detailed that they used to do the accountancy. It's not a new thing. The only thing is that no firm can survive without accountancy practices. You need to have a proper accountancy practice. And when you need accountancy practices for yourself, for your what you say, the stakeholders, as well as for the government, then there is a need of an accountant. And when there is a need of an accountant, there will never be a shortage of this profession in life. That's my thought process. Any concluding remarks before we say goodbye to the viewers?
Yeah, so see, basically, what I like to say, if so, accounting has two uses. One use, if you are an accountant yourself, you're working, providing a service. But other usage, if you are a business owner, if you understand basic accounting, it'll definitely help you to understand your reports. If you have an accountant working for you, you can still see at least the reports there. What's going on. You can read financial reports and make sense from them. If you're working in a company as marketing, for example, or maybe in HR, you will have to come across accounting, because we deal accounting on a daily basis, personal life too, and also in business life. So this course will help people, to make sure they understand, they have some understanding, some sort of logical sense in their mind of what basically, how things work. So they won't be totally afraid of it, when they see some report of accounting. Oh, no, I don't know. Keep it away from me. They can at least understand, and they'll make sense from it. That's the whole idea to bring this course in.
That's right. And from all of us, from Creative X and Bing Guru, one thing I want to do is that we will keep on giving you from the efforts of the experts some new courses. The next course, which I have online course in my mind, is a lot of people asking me, I want to have a help with my CV or curriculum vitae or resume. So this is something I'm working out at the moment there with a couple of people there. I'll see with Rahat Saab as well, because he's a corporate trainer. If we could do a live sort of a workshop where would come in and see show us your CV at the moment, what format it is. Like when I say about format, it's not about it's that on a Word or it's a PDF. I want to see how good it is, and then we will help you in that workshop to correct your CV to a level where it is acceptable by majority, if not all, of the good or corporate organization. Thank you very much there, Ratsap. I'll see you next time very soon there.
Thank you. Take care.